This leader is provided to permit.
There's the waiting room, waiting room, waiting room. Let's go, let's get it on. Check 1, 2. Check 1, 2. Come on, let's do it. Got a squeeze coming right now. Woo! Gotta reset that shit. Is this thing on or no? It's on. There we go. Get that intro out of the way and go straight into it. Reset all that. Dude, what's going on with I don't know what's going on with the channel content maybe. Hey, how y'all doing out there? We're going to switch right over right now and just check out this squeeze that's taking place right now on Spoos. See how high we can go with this. Let's take a look at right in here. Got a nice squeeze happening. All they got to do is break this previous high right here. If you're already, I posted on FinTwit just a minute ago, so should get that right there and one more pullback and then possibly all the way up right there. So leave that right there for you. And try to keep that, watch that little area right here. Then one more big old move to the upside. Give me one quick second. How are y'all doing? Oh, people are here. Fuck yeah. Sorry, apologize for this morning. I had where I've got fiber or internet. I took some pictures, and whoever the installer was did not attach one of the heavy wire and ran out the fiber wire just hanging. And it broke, which is a glass wire in a very small wire, and did not last. What's fucked up too is I ended up getting a what do you call it? A guy that came to the house, and my wife was there, and he started to mansplain to her, and he was mansplaining her about the wiring, and I had to walk over and be like, "Oh, I'm here now. You're gonna fucking keep mansplaining her or what?" And it was kind of stupid that it took that. I'll explain the mansplaining that what the dude was doing in just a minute to her. You know, if you're a man and you're talking to a woman or something like that, make sure the dude's not home and doesn't catch you mansplaining to his wife. So, hold on 1 second here. Well, give me a quick second. I got some stuff I got to do in the background. So. Should see a quick pullback right here, and all they have to do is beat this one right here, this previous high right here, which they're doing right now, and then you should see a bounce back, a check on the 1 minute trigger, and then a quick rip up here on SPY. Make sure you can see this in frame. Subscribers, any duration, members, and then let me see, we're doing members there. Save, and then hold on, I got a couple things I got to do here. Save that, and then I gotta do a thing. Save that, paste that, post this on Twitch, so people know that we're here today. Kind of pissed off that I turned the stream on this morning, right? So I turned the stream on this morning. And it went unlisted on YouTube, and I was making, so I have a bunch of I got a bunch of training films. I have been, when I was sick, right? When I was sick, I started making, well, I got sick and then I felt better, but my brain didn't feel right. So I did have some time to make training videos. I wound up making, I think, 30 training videos. And I have another 5 or 10 big ones that I haven't filmed yet. But last night, I might jump on this here. So see this right here? See this pullback right here? See this little thing right here? This is going to be a check. This is going to be a back check of the, let's go over to the trigger chart really quick. So I apologize for some of my videos here because last night I was doing a bunch of stuff, but this is a strategy that you can use this is a strategy you can use with this tool. I want to discuss this strategy really quick. So if you're watching price underneath the hourly trigger and the hourly trigger, which is the green line, is coming down, right? You're bearish. Okay? Now, if the green line begins to flatten, which it's doing right now, it's becoming a little bit more neutral. If it starts to head higher, it becomes more bullish. Now, saying that, right, in a 3-hour time period, 1, 2, and 3, 3-hour time period. So think about the stock market. We talk about half hour, 15 minutes, half hours, hours, days, weeks, months, years, all that kind of stuff. On a daily basis, be thinking about 3-hour periods. So 9:30, 10:30, 11:30 is your first one. Your second one is 11:30, 12:30, 1:30. Then think about your next one as 1:30, 2:30, 3:30 in the stock market. Then you go 3:30, 4:30, 5:30, and then they close that shit at 6. Well, then you get the 9 p.m. stuff too, but start thinking about the stock market like that. So what you want to be doing is back checking price action the previous 3 hours. And if you look here, right down here, this is 2 p.m., right? And this right here is 1 p.m. This is 1:30. But right around this 11:30 mark, we started to consolidate for this 3-hour period. And you can see the hourly trend is actually flattening and becoming bullish. So as this is taking place, if you were to say to yourself, is this bullish consolidation or bearish? So far, it's bullish consolidation. If you were to see the hourly trigger continue to the downside, let's say price was flat, but you saw this hourly trigger heading down still, it would be giving you bearish connotations. Even if price was bouncing like this right now, and you saw this happening, it would be bearish connotation. But this is neutral to slightly bullish consolidation. So if you were to run this trade a bunch of times, you'd find out that it's actually bullish at the end of the day for an upside move. So, and we're starting to see that. You actually see this price action right here. You had this previous high right here, right? And fascinatingly enough, probably a dealer came in. I saw this action right here, and dealers came swooped, bang, 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 right? And they took price down on 457s, I think were like 24 cents up here. They slammed it down to like 10 or 12 cents. And sure enough, they came right back up and slammed it up. And we actually we failed the previous high here, but we beat both of these highs right here. So we'll see if we can catch another rip up to the upside, or at least beat this high right here. Oh, did we already do that? Let's see if we beat that one. Let me snap a line and just see if let me get something more technical here and see if we beat this previous line right here. Yeah, it's close. I'm looking for this. I'm looking for a beat of this previous high right there. That one right there. Looks like it's like neutral, not beat, not beat. So I've got a neutral stance right now if we're going to go up there. I would have really liked to have seen like a real small tick, maybe one penny higher, and it would be proofing that upside move. So we'll see what happens. Or maybe it is more neutral. I was saying it was bullish, but this little not beat right here that just took place kind of gives me some caution. So we might buy this, though, for this next rip to the upside. We'll check this one out here in just a minute. Either way, this is more neutral than bearish. Definitely not bearish. And it is looking like it's turning bullish because of the time, the 3 hours that we spent on this hourly trigger. So bulls, a little bit in charge right now. See if we can go up here and try to trade this 457.47. We might have some similar price action today to some of our previous days as well, because there are 428,000 457 Cs on the board right now. So they're not going to want to print those bad boys. That'll kind of or can pin the market slightly. So they don't want to pay those out for like $2-3, something like that. Sometimes they do, but they burned them all already. They burned all those calls already, and so maybe they'll give us a little bit on the back end of this trade. If you're holding those calls, you might get a little bit of back end to the upside. Okay, so hold on one second here. I got a bunch of stuff I got to do. Dude, why am I missing all this stuff? Like, I'm missing a bunch of stuff here. Can you guys see me on? I can't see any. I don't see any multi-stream chat. Is anybody inside YouTube? Yeah, there's people on YouTube. Let me see if I can refresh the chat, maybe. Can I refresh the chat? Okay. Give me one quick second here. Weird, too. I got nothing. I must be on YouTube and not Twitch. I have to be on. I'm probably logged in on YouTube right now and not Twitch. Hold on one second here, guys. I got a couple things I got to do. Change the chat settings to members only on Twitch. Subscriber only. Bam, done. If you do want to chat with us and you don't want to pay to chat, you can always. We only charge to pay chat because of the scammers and stuff like that, robots and Russian hooker bots or something. And matter of fact, we're going to do away with that very soon. We're going to be doing a switch. So right now, what the heads up is, we're going to be changing up a bunch of stuff around here. I got Joey Donuts working on it so that if you're a member, you can chat across all platforms and all kinds of other cool stuff. So even the membership is going to change around here in the next couple days, next day or so. I can see you guys now. Sweet. Yeah, sex bots. So we're going to talk about a few things at this point and expectations in the end of the week, expectations for next week, that kind of stuff. And we're going to talk about some posts that I made on FinTwit this morning. And whoever of you was in the first stream from this morning that said in chat, short this shit down into the dumpster or whatever, short this shit to hell. Did you catch me say, do not short SPY off the bell this morning? Well, before the stream died, did anybody catch that this morning? Anybody that was in the stream, it was only on for like 5 minutes, I think, 3 or 4 minutes. And someone said in the chat on Twitch, they said, short SPY into depths of hell. And I was like, do not short SPY here. Do not short SPY. You did catch that. Okay, good. I felt really bad this morning. I was like, oh, dude, I don't know if they heard me say that or not. To not short SPY on there was a rotation on IWM this morning into SPOOs and individual tickers on tech this morning. I'm not bearish on IWM, but there was a rotation this morning for SPOOs and tech. I did make a post on Twitter that said, hey, everybody's on calls. They're all on 456s or 457s right on the fucking bell. And I was like, that looks like when the people that were shorting the Israeli stock market, like somebody knew we were going up. And I thought that was kind of fascinating this morning before, or just as we opened or whatever. I didn't see this. What you wrote? I don't know if you saw this before because the chat issue. Any feelings towards charting patterns? Yes, we incorporate. Well, yes and no. I don't know if they're the same chart patterns that you're thinking about. The chart patterns that I use are geared towards this tool, and that's the only chart patterns that I use. I keep on zigzag channels on multi-time frames, but that's about it. As long as we're staying in channel and stuff like that, I'll pay attention to that stuff. But I don't put a lot of proof into traditional charting methods. I'm not a fan of them. And as a matter of fact, this tool beats. Oftentimes, I'll go on Twitter and I'll see people posting a lot of traditional charting stuff, and they get beat by this tool because of it. They get torched because of it. They don't know where real support and where real resistance is in the market. So, do I use it? Yeah, but I'm not. I used to. I'll say that. I used to use traditional charting patterns back in the day. It worked okay for me. But now I wouldn't trade without this in any way, shape, or form. I would never be caught dead without without trading with this tool. Um, but yeah, I guess I use a little bit of a chart or a little bit of what are you calling it up there? Someone did they just delete it with their question or no? Someone said something about chart patterns. Now I don't see it. There it goes. Chart patterns. Yeah, I don't. I use some of it, but not all of it. I use some stuff with like wick off. I'll use some of that stuff because I know people trade to it. I'll use some flags and pennants and all that kind of stuff, but not because I believe in them, more that I know that people trade to them. That's about it. That's as far as I go with chart patterns. What else you guys got for me? How you doing? What's up going on, Poke Jukebox? What else? What else we got here? How's everybody doing? Yeah. Captain TJ88 said, poor guy was like this first one I've talked to all month. Shit, what do I do? Do I tell her that fiber that'll get her? You know what it was? So on the fiber, what it was this. So fiber cable, fiber internet cable is sheathed in this like double, very thick, strong cable. For its size, it's pretty strong. It's like this really hard ABS plastic. It's very thin, but it's probably like a maybe like a 16 or 18 gauge. No, it's not 18. It's like 16 gauge double cable. Looks like an old extension cord type cable, right? It's really, really stiff and stuff. And what they do is they run it from a like a small junction box into a modem, right? And this little junction box that they had, normally what they should do is put the hard cable into the box, right? They attach the hard cable, and then they cut off a piece of this very ultra thin, that's the actual fiber cable, and they attach that through this, like they wind it up, and then they use a plug and stuff like that. Whoever installed this stuff in my house, instead of or how they attached the hard cable was with a small little zip tie that was loose and wasn't pinning the wire before they used the really super thin, like the millimeter thick. It was even smaller than it's got like a 30 gauge fiber wire. It's super small, and so it was like hanging from that the actual fiber cable was just like in there hanging with the stiff cable not really attached. So all this weight was on it, and it just snapped. It's glass and encased in a very thin plastic, and they wound up snapping. So the internet was fucking around yesterday, and then this morning it finally fucking gave, and I reset. Couldn't figure it out. Wife was like on the phone and stuff, and then I went and checked it, visual inspection on the inside, and I'm like, these fucking clowns didn't do this asshole didn't attach the cable. It's kind of like if you were to go to a cable box or something, if you were to go to like a fuse box and you put like the main feeder in and you didn't screw down the main cable with the sheathing on it before you slipped in not the coax, but the THN that's inside of that cable. So it just broke. So my wife was like, it's $100 for them to come here and fix this. And you can't repair this stuff. It's like you can. There's some people that can join shit, but I was like, you're gonna need to do this whole entire thing and have those guys come back. They're gonna charge $100. And so I took a bunch of pictures, and I was like, you can see that this installation is dog shit. So they waived it, and I didn't think they were gonna waive the fee because my whole experience in life has been with Comcast, and Comcast fucking sucks. If any of you guys ever paid, what's going on right there? So if any of you guys ever paid for Comcast, it really blows. It's like, like fuck you is basically what they tell you at every turn, right? And for all the hate that I have for these large corporations, I gotta say, bravo to ATT because she emailed them the pictures, and they said we'll come out and fix it free of charge. So I'm pretty stoked at that. They weren't trying to nickel and dime me and all that other shit that they do, right? All the fake charges and the, I don't know, you paid by credit card fee and the service fee for making a phone call and the fee for making an email. And you sent us a picture, that's 50 cents. Like all that kind of stupid shit that you get taxed on by these companies. So I'm actually very happy right now that they came out and did that and kind of took care of us here. Look at that blood right now, dude. Look at that blood. Dealers selling into the market right now. They're just not giving a chance. Not giving a chance to the market here, are they? And the algos, we didn't get a new high back here, so I'm going to try to buy that one more time and I'll see if I can buy that on that red bar there and send this bad boy up. So so that's all said and done, and it's all fixed supposedly. And so what happened with how I caught my wife with him was, so this whole fiber thing, right? I had them run it longer than I wanted them to. I like made it extra long. I was like, when the guys were first installed, I'm like, give me extra 30 feet or something because I want to eventually install it in a different place in my house. And so it's like all in a bundle on a table on an exterior wall or the interior of the exterior wall of my house. And so it was just all sitting over there. And the guy's like, you shouldn't be doing this over here. And like, why is it all over here? Why isn't it mounted and all this other stuff? And trying to like mansplain to her. So I had to like go to this guy and be like, hey, fucko. Like, I didn't say fucko, but I'm like, as soon as he saw me, I was like, you trying to tell her that was mounted properly in that junction box? I'm like, let's look at it together. I was like, you got this thick ass cable that's being it was like zip tied inside of the junction box, loose. You could just pull the hard plastic piece out in and out. I'm like, this isn't how you fucking install anything, and not install. This is not a it's just like a ghetto install of some kind. So as soon as I said that, he was like, oh fuck, there's a guy here. Yeah, Comcast is the worst ever. They're the absolute fucking worst. Absolute worst. No buy so far here. No buy. But this all looks like manipulation to me. It doesn't look bearish in any way, shape, or form right now. There's a little tiny cross right here, but let's see if we can jump on some of these 457s in a moment here. Get some panic going on so we can get that squeeze that's up there in just a moment. What else do we have to go over? So let me go to my Twitter homepage here and talk about a few things. So some posts that I made this morning, important posts. I think I made one last night, too, that's very important, too. And I did do some reposts this morning, too. So we're gonna do some chatting here. I'm going to see if I can bring some of this stuff up so I can better explain some of this stuff. Let me go over to... Let me see if I can go over this and see if this helps. So, okay, so my screen right here. Some posts that I made. I made this post yesterday. This is SPX Gamma. Buy and sell the range until a break above or below with a back test or two. Upside has nice development, but the floor is glass. Easy peasy. So we're going to take a look at Bookmap really quick and explain that better. And let's see if I can do this real quick. No. You guys want to see something cool? Is that on this chart or no? Maybe not. Let me think tight 1 second. Let's go back to that chart right there. And we're going to go to Gamma. And we're going to look at Gamma really quick. Excuse me. Okay. We're going to go over Gamma really quick. So this is the chart that I put up yesterday. And what my point yesterday was that you should be buying these dips, right? Selling these rips down. Whenever we're down here, you should be buying dips, right? This is this morning, right? Let me see if I can bring this over here. So you can see it right there. Whoop. Right? So this is Monday right here, right? This is Tuesday right here, right? When we're down here, you're buying these dips. When we're up here, you're trying to sell these dips. Now, there's a little bit of a declining wedge right here. Any traditional chartists trying to sell this back down right here, right? But this is more of a coiling action than it is declining, right? So this is not really a pennant or a any kind of traditional charting or whatever. This is more of a coil in the market. See that coiling action going on, right? So anytime we're down here, you're buying dips. Whenever we're up here, you're selling rips. And only if we break below these levels here are you becoming super bearish. And here's my point. This is how you get caught in the marketplace, how you can get caught in the wrong spot. So this is kind of like a no trade zone right here, right? You can possibly, if you get like, let's say we come down here, right? We bled this down here, and you leave a few runners on, or you raise your stops and we sell down here, you're still closing for a profit. Does that make sense? You should actually be closing for profit in here, and or raising your stops in case it ricochets to the upside side on you. But you can't really get bearish here, is my point, and you can't get bullish up here, right? You can't get bullish up here until you actually break above and consolidate to go higher. This is like your danger zone in here. You could leave runners on if you wanted, or raise your stops as we might squeeze above, because you can get caught in a trap and get sent back down, okay? And the same thing applies to in here. So if you are going to get bearish or bullish on the market, right, for major downside moves or major upside moves, if you're like, hey, Cap, I'm that bull, and I think we're going to the moon, you better be fucking above the right there. Does that make sense? You need to be above right there to get your bull on. Otherwise, this is going to grind you to dust. You guys know who the GOAT is, right? Tell me in the chat who the GOAT is. Not me. You guys know who he is, right? Some people don't like him, but he has some very good points out there, right? He tells you never to get caught in here, right? Never in the middle, right? So you're buying dips, you're selling rips in here. If you're going to become super bearish, you need to see price bleed down here and reject. And that's when you actually begin to get your blood and your rain down here. It's like straight down to this level, to this 4,400, okay? And nothing is holding this up either. There's like a glass floor here, and this is kind of a glass floor as well. Not a whole ton of stuff holding this up, right? 71 million, or I guess you got a little bit of juice down here. You got 71 million, but this is only 22 million down here. So this is kind of a light floor right here, glass floor right here, and then you got a little bit of support down here at 45.15. If you're a bull, right, and you see any kind of break of 45.15, break and rejection above, that means the market's rolling over, okay? So if you're a bear, if you are a seller, you pretty much should just set, if you're a seller, if you're a bear, right, you should be setting an alert on a line on SPX currently at 45.15. If you see a break of that 45.15 and then we start rejecting it to go back up, you start getting bearish. And for a pretty big bloodbath to the downside, okay? So you remember that down here. All right, so there you go. Right now, range bound, coiling. This is all coiling action for a larger move down the road on SPX. Should be pretty simple. If you're down here, right? Until we make a break, if you see any price action down here, and we opened this morning down here, you should be buying that. Even if we had a little bit more blood, you should have been buying that open without a doubt down here, and so that we can go to the upside. Make sense? And then if we start peaking up here, right? You should be looking to sell this. Does that make sense? Even if it squeezes up, you should be looking to sell this with stops above until we have a proof that we're going to go higher from that point, or we hold that upper part, or we hold below this lower part down here. All right, next thing. We're going to go to my screen one more time. We're going to look at the next one here. Now, this is market is going to move pretty fast soon. For a lot of traders, the best bet is going to be reacting after the move and not anticipating or chasing the move. Every time this happens, even if you called it and wrote it, the reversal will be quicker than you can close for profit. So this post right here, it goes straight back to this goes straight back to this trigger screen right here. Okay, and my point to you on that post is that let's say we're down, let's say we're up here, okay, and you're like, well, I'm going to sell that right there, right? And we start to actually break above and start squeezing. It's easier for you to, if you're not a really great trader, to let the squeeze happen and then wait for after and sell it. If the move comes down here, let's say, right, you shouldn't be chasing this as a bear after it happens. You should be trying to buy this to go to the upside, okay? If we end up bleeding down here or something like that, get underneath here and we blast down and you miss that trade, you can always take the trade back up here rather than getting caught down here. And a good example of this would be the gold. Gold is a fabulous example. You saw that that gold sell. You saw that big wick on gold, right? You could have been long gold. Watch that. Like you're like, woohoo, we're going up there. I don't have any sells up there. And then you watch it immediately reversed and a huge short come into the market on gold. And that's what that post is in relation to. So if you're a bull and you're like, we're going to get all-time highs or something, make sure you if you're going to chase that, make sure you set yourself a stop on the upside that pays you before it reverses to the downside. And the same thing is likely going to apply to any weakness in SPOOs coming into next week. So I made another post here. I made another post. I'm gonna put you back over here really quick. That I reposted. It's right here. It's this one. It says, "Now we will have to suffer through 2 weeks of ping-ponging as everyone fights over its consolidation or distribution for the eventual roll down into the middle of December." Okay? So this is relevant to IWM, SPX, and tech. Basically, historically, what we should have happen here is underperformance from the two major indexes or the two risk-on-ish kind of indexes, SPX and NDX, otherwise AKA NQ or Qs, right? While you'll see overperformance by IWM and small caps, which we've experienced, right, for this week. Okay, so this week, outperformance by small caps, right? You got small caps outperforming. You got underperformance by the other two indexes. That does not mean that NDX should go to fucking hell. It doesn't mean that SPY should go to hell either. It just means underperformance while this other index overperforms. We know that's a January effect, right? They're going to be culling tax loss harvesting, but then also running up a bunch of tickers, a bunch of tickers that have performed but haven't fully performed throughout the year. So you're just expecting overperformance. So it would look like this if you were to have let's say you have boom IWM, right? Big move up, pull back, big move up, pull back, big move up, right? And let's say this one right here was SPY, right? You'd say, just a little bit, right? Just a little pullback, just a little bit pull back, just a little bit pull back. Does that make sense? So you're getting like more performance out of this IWM. Now, here's the fascinating part. When we come into Friday of this week, right, you should also see tech even weaker, slightly weaker. Now, if we get the roll into the middle of the month on these two indexes, guess who joins back in? IWM joins back in. And these three indexes will then roll together into next week. Does that make clearer sense, maybe? Using crayons for this. So where you've got all these bears, right? I can see the bears on social media right now. They're like, they want a bloodbath SPY, bloodbath SPY, bloodbath SPY. And it's not happening, is it? You're not going to see that outsized down move until IWM joins in with both SPOOs and Qs, and those divergences are very common in the market. You can very, very easily see. You'll hear people out there say, "Hey, look, small caps is turning up, and the indexes are not following for like 2-3 days. Hey, small caps starting to roll down, and the other indexes are not following, and then eventually they fall with them." So There can be a day or two or three divergence, and then you'll actually get them acting in the same together again. I should say it's a bad way to describe it, but you're getting the point at least, right? Let's check this, right? Oh, look at that nice squeeze going on. I missed that trade. I just missed that shit just now. So we'll see if we can get that now. Here we get that on here now. So next one here is this. So that's that post right there. I reposted this one right here as well because I posted this on the 29th of November. And this explains it better for you. And then I've got this one right here. This is S&P 500. Sellers want to close the door on bulls today. Hasn't happened yet. They need to defend a 27 EMA and a 1 hour and a 4 hour chart. You're cue to watch that chart. If they do close the door, though, expect acceleration to the downside into the weekend. Now, here's the caveat. Banks are likely not done yet with small crappers, IWM. Could see Qs and SPY hold on just a bit more, right? What's going on today? We've got SPY and Qs holding on a bit more, right? They ran Apple up this morning, right? Trying to capture as much gains as they possibly can out of that ticker, right? Nomura's McGilligot says price action as a function of risk management monetization winners as year-end liquidity is drying up. According to Goldman, the last systematic buyers standing are corporates, but buybacks will cease in 5 days until late January as the window is closing quickly, while CTAs will only be marginal buyers in all scenarios. So let's take a look right now. We're going to take a quick look on Webull right now, and we're going to go to a 1 hour basis. Let's just take a look at that 1 hour basis this morning, right? And what can we glean from this morning, right? You had the cross before the open here. Do you see that bear cross right here, right? Right there. This is the attempt from bears or from sellers to have a major trend change to the downside, right? That could last for days. And what do we have happening right here? An actual reversal to the upside on SPY. So are we bearish here on SPY? Let me ask you that question. The answer is no. On an hourly basis, you can see the demand coming into the market here. See the demand coming in right here. See the demand coming in right here. It's pretty fucking bullish, right? To actually be a bear trap coming into this close right now. So hold on a second. So back to this. So back to this right here, right? I'm asking you out there, did you bring this up on your charts at home this morning to see if they were able to close that door? Because right now, not only did they not close that door, but this is a bear trap into this close. That's what's happening right now. We're getting a bear trap. And sellers, I want to know if you're a seller right now, do you see it? Because that's what's happening. You're watching a bear trap on an hourly basis to the upside. It's happening right now. Right now, as we speak, they're actually reversing this like 1 hour and 4 hour blood and guts to a major upside move. So I'd be very careful right now if you're a bear of a major reversal to the upside in the next day or two. Today is Tuesday, right? I'd be super scared if I was a bear right now that we're going to ramp into the end of this week. So be super careful out there if you're a seller. There's a trap being laid here this morning. It started this morning around 9 o'clock, 8:30, and there's a reversal going on as we speak right now that's bullish to the upside. Now, let's go back to the rest of the post this morning. I need to dig out my Nancy Kerrigan memes. Now, this one right here, what did I post? What time was this at? This was at, let's see what time this was at. It's at 9:40 a.m. I posted. This is right before I lost my internet. What did I write? Someone is loading up on 456C. And I said, must be the same people that shorted the Israeli stock market, right? That means that they know something that you don't. And what did they do on the open this morning? They ramped the fuck out of SPY, didn't they? And they blasted some people. I know they did. They blasted a bunch of people on SPOOs this morning to the upside. So I do apologize that I wasn't here with you this morning, but I hope that you're able to catch all of that on FinTwit this morning. Yeah, you're gonna see a squeeze here. We're getting a big old squeeze to the upside. And there's a trap here for bears. So if you have bear friends out there, right, you should get on a DM with your bear friends and say, hey man, check this 1 hour chart out on Spoos. And they're trying to trap you into a bearish thesis in the end of this week. Now, your bear thesis should not start until Friday, historically. So you should see ping pong action into the rest of this week, outperformance by IWM. And then starting on Friday, you should be looking for some weakness in Spoos. And that weakness in Spoos is not what a lot of people are expecting. I'm going to show you something else here real quick. Hold on. I'm going to show you guys something here. And what kind of downside are you expecting would be the next to come down to a 5-minute basis here. I want to show you one last thing here. Hang tight here. So this is your seasonality calendar here, right? And we're kind of sexy. Look at how beautiful and sexy that move is on Spoos, right? We know some of this is the effect of the anticipation of rate pausing coming up. Whether that happens or not, I don't care. But I do want to show you this right here. Okay, right up in there. So, you know, you have like doo-doo, everything is fine, right? You got bears just screaming and yelling, and they're like, sell, 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 crash buy, crash Qs. And they're going to be pulling that shit right now until the middle of the month, and then you're going to get the blast down historically or traditionally get the blast down only into the middle of the month. So just be patient if you're a seller. Be very patient if you're a seller until we get into that middle of the month. Okay, so if you're a seller out there, be patient. One of my favorite trades in December, you guys always hear me talk about my favorite trades, right? For holidays, and that by the way, the holiday rally is not price dependent. So if you're looking for that holiday rally, it starts right around the end of the year. Okay, I thought Andy was getting into a fight with people on online or whatever, but I thought it was kind of funny that people were trying to mess with him. It's usually a running gag or joke. If you don't know this already, right? If you don't know this already, if we're weak in the fall in early winter, like heading into January 1st, we make fun of people about the holiday rally. If the holiday rally starts early, quote unquote, we call it the holiday rally. Traditionally, the holiday rally is though end of year is when you get your holiday rally, and we'll talk about that later too. We'll go back and look at the January and February effect and all that kind of stuff. So, anyways, hold on 1 second here. In that pullback for mid-December, I would not be expecting some of the doom that some of you are expecting. And price on that rally, I would not be expecting. I'm not going to expect that rally. I think a lot of people are like, the holiday rally we should be at 460, and then we get our holiday rally to 480, right? And I don't believe that happens personally, right as of right now. Or if we do race up there, it's going to be what I told you earlier, right? Fast moves in the stock market. You could see a major upside move, right? And then it all comes back like what happened on gold. So that just ties in the rest of that story. When I said earlier on FinTwit, hey, if you are bullish or bearish and we get this massive upside move, you might be like long for that move up to those all-time highs, and it just immediately reverses. Do you guys remember that time? I think it was 2023 in May or something, or February. We had one morning where we ramped up to the moon. We like mooned, and they sold that shit before we ever got to cash market, and we fucking rained blood down all day long. I think we dropped like 150 points in one day or something. So just be careful is my point here, how you're trading those moves as we move into trying to attain that all-time highs. Hey, what's going on, Trade Podcast? I meant to call yesterday. I will be contacting you today. I was meant to contact you yesterday, today, and I've just been in phone call meetings past couple days, just nonstop. Trying to get this shit launched. PT for the close, if we can get it, I would like to see 457.33, possibly 457.50ish, something like that. That's what I want to see happen in the close. Some kind of ramp up into the close that I'm looking for. They might not allow it today because of the options market. They could make it happen tomorrow. So as we head into this close, I might be checking out some one-date calls. Now, we have low liquidity in the market, okay? This is one of the things I got to talk to you guys about. In the overnight last night, we sold, right? You can see plain as day that the momentum in the market is leaving due to not many buyers, right? I discussed that with you earlier. You have less buyers coming in the market. Now, the market can move big when there's less buyers in the market. They can make outsized moves. But when we lose momentum, those moves come back, okay? So there's like a double-edged sword there on that upside momentum. So if you're trading this, let's say up into the close, you're going to expect momentum to leave in the overnight hours. Now, I have told people this in the past, which was every year I tell people this, like one of your best trades not Christmas, but December are spreads. You can usually just place a spread, close your laptop, come back in 2-3 weeks, and you get a print while they do all this fuck around, whether it's upside or downside. So if you're like a bear looking for on a high, you're going to look for a sell down into next week. If you're a bull and you're looking for a call, let's say you're like, oh, Cap, we're going to fucking 480, man. You just put a nice spread on into like mid-January, mid-February. And if it tags your number, you then get out and you get paid for the holidays. How you doing, Trader Podcast? I'm calling you, bro. Dude, we're gonna do something together, man. Definitely. I have a whole bunch of questions for you too, bro. What else do we got here? Last thing I'm going to talk to you guys about is Jason Hunter from JPM. I just made a post about an hour ago about Jason Hunter. I want to warn you guys out there, okay? There were some very high follow accounts making fun of Jason Hunter. I shouldn't say that, but I mean like 250,000 followers, 500,000 followers. I went over that article yesterday from CNBC with you guys in the morning, right? You should go back and watch that segment that I did on Jason Hunter. It became news on FinTwit later in the day yesterday and into this morning. And everybody was jumping on the bandwagon, shitting on Jason Hunter from JPM. For where we are in the market right now, right, he is making a valid point. Now, it becomes invalidated, or the probability of his outlook becomes invalidated if we trade all-time highs in now to mid-January, possibly even March. His outlook can be negated. But for where we are right now in price, I'm going to be honest with you guys. For where we are in price right now in the stock market, if someone asked me and I was Jason Hunter, I probably would have given the same outlook that he did yesterday. And if you don't know what I'm talking about, yesterday's show in the morning, I reviewed his outlook, and I actually proved his outlook in stream yesterday. And you guys know I'm a bull, but what he said yesterday is accurate for right now where we are. Absolutely accurate right now. We need price way higher for that 2024 back check to not go as low as 3,500. Okay, so don't drink the Kool-Aid out there in FinTwit right now. There are people out there that are pushing a narrative on Jason Hunter that is not accurate right now. Absolutely not accurate. I would be respecting what he said right now. I believe 100% what he said is accurate. Unless something fundamental changes in price to the upside. You've been killing the last 10 days, right on Trader Podcast. Good job, man. There's money to be made. Dude, this market's got some good money right now, brother. I've been doing trades here and there and making good money, so it's been pretty good. When do you place that spread trade. So I posted that spread trade. I posted that trade. That trade? Those trades. So like the one about IWM and get out of tech. I posted that. When did I post that? I posted that. When did I post that? I posted that trade on FinTwit on November 29th. Today is the 5th. So do with that what we will. If it was me and I was looking for the next trade, bullish for SPY, it's middle of December. So it'll be between Monday and Wednesday of next week at some point, right? What is the let's see if I get this right here. I would be looking for the next, personally, if it was me, right? What I do, I would be looking for that trade on the 15th, but sometime between the 12th and 15th. I'd be looking to place that next trade. And if I was a bear, I would be. Matter of fact, I actually have a hedge on the market. I've got a put-back spread that I'm going to try to close out into the 12th and 15th to the downside. So that's my plan. Is I'm actually going to close a putback. I'm hoping to close a put. My plan on this. I have a putback spread that I put on for. I have a putback spread that I put on for June expiry. My hope is to close it out next week into the 12th and 15th. My second opportunity should be February, and my next opportunity should be April. And I'm actually looking to place a call spread for end of year, and I'll probably date it though for like mid-January, late January. I'll be putting on a call spread for that holiday rally that everybody's looking for into end of year. So you'll see me do that live on stream. I'll tell you what it is and all that kind of stuff. So if you're looking for that call spread, you'll see me place that. If it's possible, I'll place that trade on the 12th, between the 12th and 15th. How do I reconcile today's bear trap with your ability to get out of your putback spread next week? So number one, a ratio putback spread will close to the upside. If I get trapped in that trade, it actually pays me about 5 to 15% if we make a giant move to the upside. If we make that move down into next week, I'll get paid that way as well. It's hard. The only way that trade doesn't work for me is if we are flat into June. So if I place that trade on like a Clorox or I don't know, like Budweiser, something that just trades sideways for like 3 months sideways, only once every quarter it goes up or down or something like that. That would be a bad trade. But SPY moves with volatility up and down so frequently that it's very difficult to not get a print on that trade. It's almost a free fucking trade. A lot of if you don't know about that trade, a lot of Theta Gang trades that trade. They love that trade. So you can like leave them on in the background. You can like close some of your Theta shit and then just leave a structured trade that's very similar to it to print for you. So I love those trades. They're one of my favorite. If I was a bear, I'd be fucking trading those all the time. It's a no-brainer, especially on SPY or Qs. Putback spreads, bearish ratio spreads, they're fucking phenomenal for bears. How much? As a matter of fact, this putback spread that I have on right now is not that big. It's let me check it right now. Hold on. I've got 440s and 446s. So 440s and 446s. I own two 440Ps and I sold a 446P. So it's actually a very tight one. Normally it's really spread out, but this one's pretty fucking tight. So I should get paid either way. What else you guys got for me? How do I reconcile today's bear trap with your ability to get out of your putback spread? Even today's bear trap, I don't expect outperformance by Qs. I don't expect outperformance by SPY either. And I think we still roll down on Friday. I think on Friday we begin rolling down. Another thing too that's fascinating to who asked that question? Turkey McNugget. Here's another thing, man. It's been on the back of my mind that I haven't really discussed. I would really like to see SPY bleed down into the rate decision and not be quote unquote priced in if we don't get a rate hike. I would really like to see us sell down into that event. It looks right now. It looks like this coiling action that's in. You were looking at the gamma profile earlier, and I was like, that's a coil. That's not a fucking bear flag or a bull flag. If that coil should last for a pretty big decision in the market coming out on I believe Tuesday is the 12th. So I'm not expecting like moonshot right now, and that's the other part too. Is the collar, the JPM collar for end of the year bothers the fuck out of me. That JPM collar is bothering me. It's like a thorn in my side. If I had any thorn in my side right now, it's probably that. Do we come back to it from do we come from the upside down to it, or do we come from the downside up to it? I think as a bull, my preference, truthfully, my preference would be that we are lower into the 31st, and we trade up into the 31st for continuation up to 4,800 in January or March. And I'll show you that right now too. Hold on. Let me show you something really quick. So the collar, what's bothering me, like you guys explain this to me, okay? I'll ask you guys because I haven't really asked anybody too much about this, but a lot of people know about this, right? So this is the JPM collar, and we end up having like magnets at the end of a collar. See it right here? See it right over here? Like the magnet. They're like, you know who says it really well is Andy Constant says it. I think he calls it the vortex, right? He's like the collar is a fucking vortex. He's like, I don't give a fuck where price is. He's like, when we get into the end of the quarter, one of these strikes becomes a vortex, right? Where it attracts us like a tractor beam towards it. So reconciling this right here, right? This is end of quarter, right? You're gonna expect us right now for price action to get sucked into this level, this 45.15. Okay, so you have to pick one point. You have to pick one poison or the other. You're either gonna pick the poison that we're gonna moon, right, and just fucking rip some faces off, right? And take out at least this right here, let's say 4,600. We kind of already did that. Is that what you're expecting, or are you expecting this maybe? Are you expecting hold on here. Let me just snap a line here. Let me ask you what your thoughts are on this, especially bulls, because I think there's a trap in thesis here for bulls. So let me ask you a question. This is the previous high, right? It's the previous high right there. Here's the other previous high. This is the one from 2020. One from, let's go a little bit lower. We got this one right here. We haven't even beat that one. We haven't beaten that one yet, right? We haven't beaten this one yet, right? And this is the other one. And this one up here would be an all-time high, or let's say, okay? So let me ask you a question in here. Okay, so these are all these previous garbage shit that we want to take out, right? This is the 29th, I believe, 29th of December. And we know there's a magnet here, okay? We know there's a magnet right here. So let's write that in. We've got a magnet right here, right? You got a magnet, right? For the 31st. This right here is the, let me see if I make this just larger than I guess. Put that right there. This is your magnet, right? So let me ask you a question. You don't have a lot of time left, right? Are you saying that we only get this one and come back down here? Are you saying that we're going to go up and just smash in on Jerome Powell doesn't do anything, right? This looks like gold, doesn't it? And you just squeeze the fuck out of the market up here, and then we blast down into the end of the year. That's your other option, right? And then what would be the what I think my best option is? We do this sideways stuff here, blast down into Jerome Powell, right? Bloodbath. And then we actually make our way back up into the magnet, and we have continuation into January and February and actually take this stuff out. Personally, I think this is the most logical, this is what I think will happen. I'm not against this happening over here, but that would be a shocker to imagine coming into Christmas or Hanukkah or Festivus or whatever it is that you celebrate or whatever, or nothing. This would be unusual, right? Unusual traditionally for us to do this. And how often do we leave that behind? How often do we do something where we break above and do that? Rare. Like you're talking like 1 out of 20 or 30 callers, we get action like that. So try to square this away with yourself heading into end of year. I need you to do that because I need you to square this away. Remember where VIX is right now, or think about where VIX is. Just think about this stuff into the end of the year. Like things that you know. Hold on here. Think about things that you know to be true. Like not guessing, not more information, more information needed. Start thinking about things that you actually know into the end of the year. Know that there's a magnet down there at 45.15, and know that the likely path is probably a pullback for that run into Q1. So think about that. I want you to think about that. Think about that magnet into the end of year. And would you rather come up into it? You have a relief blow off, right? Not blow off, but let's say you have a relief where we blast down, right? Blast down in the decision-making process with Jerome Powell. We go to the depths of hell. Think about this. All the bulls are fucking destroyed. All the bulls are crying. They're all trapped. They're scared. They're fucking, crying and tears coming out of their eyes. And all it was an opportunity for you to buy a fucking destroyer of a dip and just trade that shit up and just slam out all that shit on January of 2022. Think about that right now. I'm not saying it's going to happen. I'm saying I think we're pulling the gun a little bit early, pulling the trigger on the gun a little bit early that we're going to 4,800. And you like Happy Jerome? I'm more fascinated by the mechanics of this, how it's going to take place. And what else can we derive from this, right? So you just saw this chart about the collar, right? Now think back to the chart I showed you with the gamma profile, right? That gamma profile that we have new call walls opening up at 47.50. But where do we need to be to chase that? So let's say we know where the collar is, right? If we go back to that gamma chart that I showed you a moment ago, and you got me harping on you, telling you, you got me saying to you, well, you tell me where we're going, right? The one positive is that here. So here's 4,700. There's 47.50, right? The one positive is this. We know where gamma is. We know that if it begins early, right? If we make that run to 4,800 before we get to the collar on December 31st, what are we looking for? Price above right here, right? If we start coming up here and consolidating, and it's only like Monday of next week, I'm going to give it to the bulls to have a chance to go up there. Just get what I'm saying? So these are some knowns that we have in the market right now that can help us to find out or to get insight into which way it's actually going to go. Are we going to run up to that 4,600, the 4,800, or at least 4,750? before or during JPOW? Well, let's say now into JPOW, or are we going to wait until after the 31st? Does that make sense to any guys out there? Did I lose any of you guys on this? Did I lose? And here's that yellow bar back here. See that yellow bar right there? We're going to extend this over for you. That's the target right there. Watch out! There looks like there could be a bloodbath here. Let's see on spot or not spot on. Keep your eye. Be very careful in here. There's a lot of like there ain't nothing there holding us up. It's like there ain't shit holding us up right now. So and there's that big bar just begging for us to come down to bloodbath this. See this right here? Be really careful here. You see that? Be really careful in here. It's like a big old magnet trying to pull us down over here. Someone's pissed off down there, man. That's like someone saw that reversal and was like, pull that price down. They are pissed. Someone's angry out there right now, for sure. Someone is angry at this reversal in the market right now. Yeah, no, I'm not. Look, only thing I'm going to tell you guys out there right now is this, okay? You can tell me till you're blue in the face. I'm going to tell you, how often do I come back on this show and say, I told you so? And I'm going to warn you guys, okay? I could be wrong, but we're talking about a 98% of the time, right? We fucking magnet that 45.15. So please heed that 45.15. Please heed that. Please do your best to be hyper aware of it in this next week. Be hyper aware of it heading into Jerome Powell. It's very rare that we don't respect those things. Very, very, very rare. I've only seen it a few times, like maybe 5 times total in 15 years. Maybe 4, maybe even less. I think the last time I saw us was I think it was 2020, but and we're in 20. So 3 years I haven't seen it. So not that I can recall. Yeah, I'm not anti going there right now. Or how high do you think it goes? I'm more concerned with if we start ripping up there, do we come back down to that 45.15, or if we go below the 45.15, do we come back up? And I think they know it too. So be aware of that. And Jerome knows the implications of no rate hike. You all are aware of that, right? If he does not raise rates, he is aware of its impact. Jason is as well. Jason's hyper aware of it too. Jason from a JPM. He should be in calls. Calls are good right now. Or they're good-ish. His name's Limit Down 69. Let me see what you guys are saying here. Some of you guys are chatting right now in Twitch and YouTube and read what some of you guys saying. The poor guy. No. Hold on, I'm gonna scroll down. I'm missing a bunch of what you guys are saying. Have I looked at XBI as a shitco squeeze play? I haven't looked at it in I think a half a week. Let's take a peek right now and check it out. Ooh, dude. Woof. That's a nice fucking coil, huh? My God. Positioning is bearish. Hold on here. I got a pullback in here, but a target up here. Second target I've got at $84. I expect a pullback down here. And then you actually get that second move up on XBI. I'd say you've hit your first target, and you're now, so we have that target there. We hit that one right there, and then you get a second target right there, and then you got 1, 2. Then you got a bigger target up here, and then a roll down. Oh, no. Hold on a second. I thought I had a bigger. Yeah, right up there. Bam, down, bam, down, bam, up. I'm bullish on XBI. What else you guys got for me? Hold on here. Move that one back. 1 minute chart. Let's see what you guys, hold on a second, read what you guys are saying here. You look at XBI, boom, there goes upside gamma. Jerome is going to give us last Christmas gift, LOL, happy tie, no tight lips and throwing jokes. Hold on, Trade Podcast, I'm looking right now. You're in calls, but for Misfit for last 15 days out. I don't think Misfit outperforms big fat upside for MOC. Yeah, for an imbalance. Happy Jerome. You like Happy Jerome? Career low, what's going on? What if we move into end of year and then come back down to tag the magnet? Career low, I'm not anti that trade. I'm not anti going up there right now to tag that shit and then come back down. That's what I'm afraid of is like the did you guys see what gold did? Any guys out there see what gold did? If you look at a daily chart on gold, it went straight fucking up and then a big giant fucking wick down. It's like the third time it's happened. So I'm afraid that might happen on SPY. Like you get that big fucking giant squeeze. It's like straight moonshot, and then you don't close, and it just reverses on you. But I'm not into that trade, career low. I'm down for it, brother. What else you got there? How much percentage move do you think up or down be profitable? Normally when I trade zero dates, let's say I buy them for 10 cents. If I can get 20, I'm happy. If I can get like 100% trade, I'm very, very happy. But if you're skimming 30%, 50%, I'm happy with that too. But if you're green, man, just raise your stops in case it comes back on you. Remember that zero dates are directional only. I never hold zero dates all day long. Like as long as we're in that direction, I'm happy with them. I tend not to hold them. For too long. Rubner from Namara suggested putback spreads for January. I've got mine for June, dude. They were cheap. I got some good spreads for June. I was like, fuck it. That 440 is like that 440. I made a comment the other day with someone on Twitter, and I was like, dude, that 440, 4400. Who the first person that coined it, in my experience, was Derek Trades. What's his name? Derek. Fuck, I forgot what his last name is. Derek Trades is what he does now, but way back in like 2020 or something, or 2019. I don't know if it was, I think it was 2020. 2020, I think it was. And we thought we were never going to see 440 again. And we just kept going back to it and back to it and back to it and back to it. And sure than shit, it's been a level of interest now for, what, 3 years, 440. So that's like a place of, it's like a place that we magnet. What else we got there? If I had a gun to my head, and you had to put your money with GS or JPM, what would you choose? So if you guys follow me on at Captain's Alpha, right? You guys probably, you may or may not know that I have money with JPM. Okay, I have like retirement money, and some of you know that I get they send me newsletters and all kinds of other stupid shit. And I remember last October, there was like doom and gloom, and then December came around, and we were heading into January, and I did a big long fucking post that I had posted a link to some of their letters. I feel like they tell you, I feel like they tell like Bob on Main Street. So like those guys will come out and they'll tell you the doom and gloom. But if you have money with them, they're fucking spot on. Like they will come to you and be like, hey, for 2024, I want you to buy XLK. Or for 2023. For 2024, I want you to sell XLI. And they just like, I don't know why they don't make that shit public. I don't know why there's two voices, but they do it. So a lot of times what they say publicly is not what they're telling their clients. That's the only way that I could describe it. So I think they're really good at what they do, but it's not really what the news is. Yeah, so that's what I think about. Like, so what I think is that, or not just think, but from my experience, they put the doom and gloom out there because they have to, and they should. They should say, like Jason saying, hey, this is on the table for next year, is responsible of him to say for where we are right now. So like for right now, where we are, the information that he put out yesterday, I thought was responsible and is valid. If you watched the show yesterday, that segment, I show you the monthly decline in velocity on the markets, and historically, that does give a signal of those things to come down the road. So I think price is going to matter, though. What Jason is saying, if we have a high enough price, I don't think the damage will be as low as 3,500, but I do see what he's saying. And his thesis is spot on. So, and what we use here is what hedge funds use. So, it makes sense to me what he put out. Are we bullish on Tesla? My positioning of Tesla has not changed in the slightest. I see a pullback on Tesla into next week, and I think that's going to be the best buy for Tesla. So I'm waiting for that buy. Why would there be a bloodbath after Jerome Powell? I'm going to give you a few. This is a good question. So, number one, Jerome Powell, right? Even if he doesn't raise rates, if I was Jerome Powell, he's in a corner right now. He's in the corner of all corners. I assure you of this. He's like what's the movie there? Roadhouse. What do they say? Nobody puts baby in a corner. I think that was a saying, right? He doesn't want to be in a corner for anybody. And I think if I was Jerome Powell, I would do a raise 25 BPS. I would raise 25 BPS, and I would do it not because I want to. I would do it to buy myself time. I would buy myself another 5 or 6 months. Now, 2 rate increases ago, I think it was two ago, he said, remember he broke out all the charts And he broke out of the bullshit, and I was fucking having a meltdown on the show, and I was like, what the fuck is he doing? I was like, why is he doing this? This is so bad for his position, right? And now we are here, and this is now paying off against him, right? Now we've been through 2 rate decisions since that shit, and sure enough, he's backed into a corner. So the only way, in my view, for him to give himself some breathing room, even if he doesn't raise again, is to raise 25 BPS. So I'm going to warn you of that, okay? If I was Jerome Powell, I most certainly would raise 25 BPS for the only reason of buying more time, another 5-6 months to be able to raise again if I need to. He knows. He fucking knows, okay? I'm going to assure you this. He knows that if he does not raise this cycle, this decision, if he does not raise, okay, the market will react as if the rate hike cycle is over. And I don't think he wants that. I think he wants to pause and hold as long as he can. And I don't think that he will or can do it with how the market will react to it. I think just like Jason thinks, and you guys have heard me state this before, if the rate cycle is over and price is not high enough, we will see that check back. And Jason is correct on that. We will likely see that pullback all the way down to 3,500 next year. And they will likely be forced to chase rate cuts into September of start in September at the latest of next year. So think about that from Jerome's perspective. Does he want to cut rates in middle of year next year, or even potentially in the spring and summer of next year? I don't think so. I think he wants to hold as long as he possibly can, at least hold rates into next year. He stated that as such at this point, and the mechanics of the market will likely trade against his want to do that into next year. So he's in a real predicament right now. He really is. In my view, he's in a predicament. Now, saying all of that, right? If he does raise 25 VPS to get by himself that time, he has likely sealed the deal for a recession and possibly a really bad one. So there's some other shit to that statement that I just made, that he's likely sealing the deal to a major recession. As a matter of fact, you should be watching oil right now. Made a comment about that this morning. There was a bear on Twitter that was like, blah, 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 blah about rates or something. And I was like, no. You want to be watching fucking oil, because oil can be that predictor as well of that happening. And oil right now is kind of showing that, right? That's still a possibility that we get the recession. Well, that's true too. So who said that? So Career Low just said the pause might be the only way he can really buy time and then surprise hike to fuck all the front runners next year. So the concept here would be, the concept here is that if he does not raise in this cycle, right, this decision, if he does not raise, historically, we are done with rate hikes. If historically we're done with rate hikes, it would behoove market participants to front run that eventuality. Typically, when we front run that eventuality, right, we will back check from price where we are. And how that happens is, if we were above the previous high from 2022, January of 2022, right, we'd go back and back check that previous high, possibly 44.00 and 4,000. If we fail to make a new high right now, right, we're not above the previous high of January 2022, and we start back checking, we ain't back checking to 4,400 and 4,000. We're going to back check 3,500. So he will be forced into that. You get what I'm saying here? He's going to be forced into, the market will force him into those rate cuts because of the bloodbath coming. So as we start blasting down in that 3,500, and even if he does surprise rate hike, the market's already heading down, way down, right? He won't be hiking. He'll be forced into cuts. So it kind of sucks. Yellen is saying, had headlines about high rates being no good. Do you think they will coordinate action this coming year? So that's the other thing. So their vehicles right now are 10-year yield, right? Or rate hikes, right? That's what they're using for tools right now. If the yield curve inversion is uninverting, where if the 10-year is not going to pay them, or not pay them, but remove liquidity from the system, what vehicle do they have? So it's either rates. Well, it's not just either rates. So I'm kind of I'm dumbing this down. Like their vehicles are basically the rates or the 10-year, right? They have some other vehicles too. Taxation is one of them, right? That comes from the federal governments, your state, your local, your county governments, city governments, stuff like that. There's something else too that no one wants to. There's something else, or there's two other parts to this that there's like an elephant in the room that nobody's talking about. Like you hear a lot of bears say things like, or hawks or bears say, what about this and what about that and what about this? There's two big elephants in the room. One, wages are coming up. So it could be like a modified we beat inflation, but because wages are coming up. So they're like, we're going to beat inflation. We're going to get underneath the rate of inflation, right? The year-over-year rate of inflation. We're going to bring it down 2%. Well, we might not have to because wages are coming up. That, though, means that, again, you're never going back and paying 99 cents for eggs. Your fucking hamburgers are going to be more expensive. And young people are going to have to work through making more money over a new cycle over 10 or 20 years. So you got that to contend with. And then the second problem going on right now is people are repackaging their bad debt into these high rate loans. They're remortgaging their homes for 8% and dumping the 20 and 30% bad debt in. So you're extending the pain on the consumer, what they can absorb for another 2 to 3 years at minimum. So I don't know what their options are here. They either have to like claim that they won, and say, oh look, wages are at least catching up, or they probably have to do higher for longer. And to do the higher for longer, they likely have to do another rate increase. It's a real pickle, man, for these guys. It's a real fucking pickle right now for Jerome. And everybody can sense it. You can see it, right? You see it in the news. You see it in FinTwit. You see it by very smart people discussing it, that they have to cut rates, all this kind of stuff. Shit's probably already broken, that kind of stuff. So I'm fascinated by this rate decision personally, what he does. I think this is the most likely time you get a surprise rate increase. If there was the most likely time, this is the one where it's very probable. If there was a surprise, it's very probable this is the one where you get the surprise. He buys himself more time. I'm not in anything right now. I'm looking for a buy for squeeze, but I still haven't bought nothing. I think you think that they have to go higher for longer. Yeah, I do too. I'm not in disagreement with that. That they have to go higher for longer. I would prefer them to go higher for longer, but I don't see the market reacting like they. From a previous history standpoint, the market will go against him. If he doesn't raise rates and he tries that shit down the road, this market's already going to start fucking. It's going to grab some liquidity and start back checking lower levels. And the only real support we know that's for sure is 3,500. Like real support in the market's down there, 3,500. I agree with him. I agree with Jason on that. So for right now, where we are, that's what I agree with. And I'm a bull, by the way. So don't think I'm on bear side or hawk side or anything like that. I'm a bull. Why would there be a bloodbath after J Powell? There's a bunch of scenarios after J Powell. There's a scenario where J Powell could announce no rate hike, and we could moon. We have examples in the past where we moon, like straight moon, like one green bar that goes straight the fuck up and doesn't come back, and then they short the market from there, hard and heavy for like 3 to 6 months. So that wouldn't shock me. I wouldn't even fucking blink if we didn't raise rates and this market just like straight moonshotted. And then you'd get a bunch of bulls saying, woo, we're going to fucking go to 5,000 by January 1. And that was just a grab for liquidity to start that mechanical process of back checking all these levels. So it could be like a I don't know, like a poisoned wind for bulls. Now, if he doesn't rate hike and the market doesn't react and they believe him that he's going to raise, I guess, down the road, sideways and up and normal pullbacks again. 25 BPS hike, sideways and up with normal pullbacks. Market would be in pause for another year or another 6 months till June of next year. June-ish, June, July next year. He'd have bought himself some time. What else you guys got here? What else? Some Synchronities just said run up to rated decision, 99%. No hike priced in. He hikes, market tanks initially, then grind it up slowly after. Yeah, I agree with that. I'm on that trade with you. I'm a believer in that trade. He can pause all this shit. He can pause everything Jason's saying. He can pause everything that everybody out there is saying if he just does 25 BPS. He can put the fucking brakes on every action in this market if he does 25 BPS. Or historical actions that take place. And we don't have some stuff here like we don't have unemployment at 6 to 8%. We don't have 6% unemployment, right? We don't have any of that yet. It's projected for fall, winter of next year, but we're not there yet. There's a lot of stuff that isn't there yet for him, so everything's still kind of wonky for him. Ooh, hold on. Grab some 456s here. I want to see if we can run this up into the bell. I hope he does it, Cap. 25 BPS to make the markets dance for a few days. I like the idea of the 455 or the 4. I like the idea of a 25 BPS. Send the market lower, right? Panic all the bulls. None of them are long. They're all shit in the bed. You get the bears out there telling you doom and gloom, and then you actually have that run up into the first of the year, first month, first whatever. I got calls right now. You think we get the repeat of 2018 with no comeback? I'd really like to see us above. So there's this like thing here. You guys know about Wyckoff stuff. I've given you the links to Wyckoff and Wickoff and stuff like that. Like, if we fail to get that new high, it's there's a lot of people that are going to trade against to the downside. That's what Jason's basically saying. If we don't get that, if we don't get above that, that new cycle, you won't see us like back check and go higher, continue on. I'm reading what you guys are saying right now. My calls are for tomorrow. We're running into an iceberg, RS is saying. You think they have to go higher for longer to read that one? What else we got here? Are we bullish on Tesla? Let's look at Tesla. I think I said my take on Tesla. Let's look at Tesla really quick. I think I said yes, but not in your time frame, right? So on Tesla. Here's Tesla. So on Tesla, I'm bullish, okay? So let me go to the Tesla chart really quick. Trigger screen. So there's Tesla, right? The beautiful, do you guys, if you're a Tesla out there, this fucking tool is gonna love this tool. Buy it, right? Buy it. Daily trend is on the upside. That's all good to see. But I do wonder about the 15th of a bloodbath, and then you get your real move. So I'm looking down here. I'd really like to buy this dip down here. We talked about this yesterday. I'd like to buy that like 232, I think that is, and maybe even lower, but I'm looking for that buy right there. You know, I fucking hate chasing, guys. Like, I really do. I hate chasing. I hate being like chasing the tops and all that kind of stuff. I really like. How often do we come into? How often do we come into? I mean, let me ask you guys a serious question here. Let me ask you guys a serious question. Like, let me ask you guys a serious question here. Like, how often do like you see the market moving up and you're like, I gotta chase that, right? And you like every voice in the room is bullish, right? Just chase, 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 chase. And you wake up the next morning and you bought like the top 20% of that move. Next morning, it's way the fuck down in the fucking depths of hell, and that was the real move. You know what I mean? That was the real upside face ripper. And you're just sitting there going, "Fuck, I had the direction right, but not the timing of it." So you might miss some trades, and you might get left behind on a trade going up. But if you shift your focus to looking for those moments in an otherwise strong stock, for the weakness in the moments in that stock, you'll probably be better served for making more money. So, yeah, they're parking the bus, dude. I got calls for tomorrow, so on this hourly trigger, we'll see what happens tomorrow. You go with this red bar down here too. You got that like somebody out here is like, oh, you guys can't see that. Hold on, right down here. Be careful of this big old red bar right here. Right there, that one right here. See, this is called the stink bit down here. It's like a fucking magnet trying to pin the market. They do not want that close over that hourly trigger, do they? They want that close underneath that hourly trigger. Yeah, I fucking hate breakout trading. I can't stand it. I can't stand breakout trading. Can't stand it. It drives me fucking batshit crazy. It's like some of the most frustrating trading that I've ever done is breakout trading. Whoever's parking the bus is drunk. Hold on, let me see what you guys are saying on the chat down here. You put any stock in the eye that because of the ridiculous amount of money printing over the last 3 years that all these historical TA patterns are not completely unreliable? We got to close. Hey, by the way, we have to close above here. So we don't have a choice. I'm going to have to close these calls if we don't close above here. I got to watch this close really quick. I'm going to watch this last little bit of the close. They're trying to trap bulls here. So I got to watch this very closely here. 6 minutes left. 6 minutes left. 6 minutes left here. What were you saying? Another point. Hold on. You put any stock in the idea that because of the ridiculous amount of money printed out, that all these historical TA patterns are not completely unreliable? No. So dude, look at these they're trying to fucking trap a bull in here now. They get the fucking bear trap at the open, and now they're trying to fucking trap bulls down here. Be very careful here if you're a bull. I'm in some calls for tomorrow right now. This close is gonna matter to me. So historical TA patterns. Are they blown out? No. So these computers have to run on this software has to run on knowns, right? Not unknowns. So no, I don't think that they've been blown out at all in any way, shape, or form. I don't. So I don't know how to answer that question for you about historical TA or technical analysis patterns. I'm trying to figure out what you're looking for. Maybe I need more information, brother. Synchronicity, synchronically. What are you? Can you explain better? Another point is financial conditions, which he has talked about a lot, are extremely loose right now. They are extremely loose right now. I agree with that too, and you can see liquidities in the market. I'm trying to understand what you mean by that question, if I can answer it better for you. They run cycles. They do run Elliott Wave. You guys know that, right? That they're Elliott Wave. There's about, so from my perspective, I respect all the different trading styles. I know that a lot of people trade to those styles, so they're respected even if they break, even if they don't work. Like if so let's say if I was talking to an Elliott Wave guy, right? He's like, the target is 5,000, right? And a lot of Elliott Wavers agree on that. Even if we break above 5,000 or break below 5,000, there's going to be a moment of pause there due to how many people are focused on it, right? Then let's say you got a Gamma Bro and he's like, oh, the target's actually 50 or 525. I would expect the next, like when we hit 525, that those Gamma Bros going to be there ready to put some trades on or off. I got to watch this close right here because I don't want to get trapped. This looks like a roll. Be really careful. If you're a bull, this is sometimes a bull trap here. So I gotta watch this right. Someone's trying to set this market right here. Wonder who it is. Who's trying to set this into this close? VIX is at 12. VIX didn't close that gap down below. Who the fuck's doing this right now? Kind of scared here being long. I'm gonna have to close my calls out. I don't like this action in the close right now. Don't like it. Let's see if I can get this. Let me check PMI really quick. I didn't get to look close to it. My PMI looks good. This is a sketchy ass close, man. Historically, okay, so Career Low is saying historically he thinks that historical patterns don't line up with the current environment. They line up perfectly on our end. My end, they line up just great. Keep on squeezing, dude. Get back up there. Give me that big old close. Don't be closing right here. Oh, they are fucking trying, man. The idea that TA is all analyzing data sets and you take all these historical data sets and you dilute the living shit out of them, do the patterns still hold up? Sure, let's look at that right now. You guys want to look at it real quick before we close here? I'm still long calls here. I got 15 minutes to make a decision. Let's take a look really quick. I think we looked at this yesterday, but we'll take a look. So let's take a look at SPX really quick. See, it's what's another long one? DIA maybe we could look at too. You want to go farther back in time? DJIA goes back far in time, right? NYA goes back far in time too, right? Let's take a look at it. Oh, am I in the wrong one? Hold on here. Hang tight 1 second here. Is it NYA on this one? I think it's NYA. Let's look at NYA. I think this one goes back to 1800s, right? I think it does. Let's see how much we can compress on a chart here. Can we get that far back in time? We can go way far back, right? 73. How far back can we go on this? This is 1982. Maybe we'll go back to the, hold on, Dow Jones. DJI. Does this go back all the way to the beginning of fucking time? Hold on, give me a second here. This one goes back to 1800s. Go all the way back. That's 81, 74, 67. Yeah, let's go back in time. So you think that they've fucked with TA, right? Oh, yeah, baby. Printing like a motherfucker. Woohoo! Woohoo! You guys want to see some cool shit? I got some coolness for you. I got some cool shit for you. You guys want to see some coolness? I got some coolness for you. You guys ready? Let's look at some cool shit here, okay? Let's look at some historical context here, okay? Let's go back to the stock market crash of 1929. Right? 1929, 1930, right? You guys want some coolness? We'll do some cool shit. You guys don't see this in anybody's program. We're going to do this. We're going to do something nobody does out there, okay? Let's talk history and TA. I'm not an Elliott Waver, okay? But a lot of this stuff is Elliott Wave based. So we have these things called grand super cycles. You'll hear a lot of big Wall Street guys, right? We'll talk about grand super cycles and short long-term debt cycles, price action, some of the worst moments in history in our stock market, right? And so when people say to you, well, the crash of 1930 was the worst it's ever been. You want to see the example of why it was the worst it ever was? I'm going to show it to you right now. The reason it became the worst incident was because they did not expect this right here. This exact tag. You see that exact tag on that gray line right there, right? And this is very similar to what happened up here, believe it or not, in 2000 and 2008. Because I'm going to go back and we're going to check 2000 and 2008 and why. And why 2000 and 2008 was not as bad. Why 2001, I should say, in 2000 or 2001, 2007, 2008 were not as bad as the Great Depression, right? We had that break of this big gray line right here. This was really fucking bad. Really fucking bad. Okay? If you're going to expect a Great Depression, you're going to expect us to break that gray line right there, okay? That's a Great Depression right there. Just so you know. This is part of 1930. This is 2001 and 2008. Okay? Now we're gonna look cyclically and check out some cool stuff. What's another time when things were really bad? Like really bad. This is World War II right here. And you can see here the depths of hell, right? This is the initiation of World War II, right? It was not right before World War II, 1938. I was just getting ramped up. And then we have 1942 right here. And you can actually see when the soldiers come back home and the cessation of fighting, right? This is 1946. And then the boomer years right here, right? Boom, rocket ship. Look at that. Boomers, bro. Right? This is coming back. Everybody's getting house mortgages. Everybody's pumping out 12, 13 kids. Look at the stock market here. Just ripping face off, right? Look at that moves in the stock market. This is 1953, right? Boomers. The boomers were 1948, I think, to 1963. Don't quote me on that, but I think it's roughly right in there for boomers. Look at that big tag down here, right on that blue line. Boom. Start moving, right? Boom. Look at these boomers. Just boom, right? Just boom. And even in this time period, look at these pullbacks. Remember this, okay? This is your monthly trigger right here, okay? Pullbacks, crashes, goes to the blue line, right? This is your quarterly trigger right here for crashes, right? The only time since that time period that we've ever hit anything like this, we'll look at in just a moment. We actually hit these in 2001 and 2008. So think about economic conditions. Think about our stock market over time, okay? Look at this big bad boy right here. This is 1969, right? What happened in 1969, 1970? Do you remember? Someone in the chat tell me. Anybody remember what this was? I want to know. We have another one right here, right? This one came in 1974, right? Remember that one too? Pretty bad, right? Bad back here, 70, 74. trying to get up there. And then look at this one right here. This is 1982. Remember that 1987 crash that we had, right? Look at this run right here. Check this run out. Look at that run. What's fascinating about this run from 82 to 87 is even that crash only put us down to the quarterly. Not so bad, right? Not so bad. Never saw this prior low. Never saw this prior low. Never, right? Never ever went back to revisit these lows on that run in 82. Nor did we go back and visit these lows. We didn't go back down here, plunge down in the market, right? Didn't happen. Right? But what's the norm here? What can you piece by this stuff, right? Tag the blue. Tag the blue. Sometimes we tag the purple. Very rare that we tag this stuff down here. Right? So if you're going to start thinking about probabilities, right? We have a lot of moments where we're tagging that blue line, isn't it? Check that out. Right? Look at that. Touch off that monthly, right? Back up to the top again. And what is this time period right here? 2000, right? 1999, 2000. Blood. Where do we tag? This is the quarterly. Right? This is your quarterly trigger down here, right? Pretty bad, right? What's this right here? 2008. This is when we had the housing crisis. Worse than the tech blow off top, right? This is worse. And what is fascinating about this is what? We went lower than our previous low, didn't we? Right? So just imagine right now, right? Think about this. If you're watching this stream with me right now, I want to ask you a question. If you were trading in 2008 with me, and we knew there was fraud in the market that was worse than the top in 2000, 2001, and you said to me, "Hey, Captain, where the fuck is bottom?" I could give you that, couldn't I? We could slam into this. Look at this V-shaped recovery right here. Whoop, straight up. And I would say to you, the worst that we're going to get is that 7,200, right? I would be lauded as Jesus or some other fucking prophet out there, wouldn't I? Smartest fucking guy in the stock market. Time the bottom of the 2008 crash. Guess who else does this? The fucking banks. They know where it's going beforehand. They plan this out over hundreds of years, going back to the 1890s. So if I can look at the entire history of the stock market, I can say to myself right now, I can make a posit right now by 2008, right? What can I say about this? I can say if we have fraud in the market, probably right down here is the worst it's going to get. On average, crashes should go no lower than the purple line. Depending upon how high we squeeze, this should be the depth, the worst case scenario, right? If we go to war, World War III, if we have a depression, that would be the only time that I would tell you that we could break through the last band down here, right? Only if we're in World War III, only if we're in a depression. Make sense? 200 years, right? Not 200, maybe what is it? 1890. That's 100 there. You got another fucking 10 or 20 years before it, and then we've got what? We got fucking another 20 years so far. So I said 200 years. Let's call it 130 years. I'm a little exaggerating here. Okay, so let's continue on with history here, right? Most crashes since 2008. Fairly steady, right? Bam, bam, bam. This isn't even SPX. On SPX, we wouldn't even come this low, right? I'll show you SPX in a minute, but this is the COVID crash, right? Almost a near pinstrike, right? Pretty scary times. I remember in the base of that, we bounced right off that and we rocket chipped up, right? Now, this is Dow Jones Industrial Average. But let's show this on SPX so that you guys have more. You guys don't trade Dow Jones, but let's look at SPX and see what it says. Same chart. Let's look back on 2008 and 2000 again. All right, so here's 2000 right here. And we had the tech bubble, right? Tech bubble. Could have called it, right? Now we have all this history to tell you this is the worst you should expect from a tech bubble or something similar. Back here in 2008, we went down to this bottom gray line, right? This is the fraud, right, that we had, right? The fraud in 2008. Imagine me coming in here, and we're down here, and I tell you, buy this fucking dip for the rest of your life. And you go, fuck you, Cap, the world's ending. And 5-10 years later, you're rich. You understand what I'm saying? So let's look at where we are in our stock market right now. Someone's asking, are all that TA, is it worthless? So on SPX, almost a perfect pin strike down here, right? On that purple quarterly, right? See that quarterly trigger down here, right? Expectation, worst it can get during COVID. Greatest trick that the Fed ever pulled was buying time for the market. When we began the rollover in 2022 and we were coming down here, we had a high risk of major downside, didn't we? Right? Major risk of trading 3,000 when we started January of 2022. The Fed trades us sideways into right now. And what has happened since then? Those levels have done nothing but come up, right? Fed's buying time, so the damage isn't as worse, right? Not having to see this again, right? We already know that tech bubble here, fraud here, right? We already know that. You got JPM coming out and telling you, worst case scenario, if we don't break that and this, is 3,500. Right? What is SPX showing on that quarterly? 35.49.18 on SPX right now. So he's giving you the worst case scenario, right? He's telling you, the guy from JPM's telling you, well, if we fail this or we don't get up there, we start blasting down into the first of the year, that's your bottom down there. He's not telling you, yeah, you're going to have a tech blow off, right? He's not telling you doom and gloom. He's telling you that time has passed. And even if there was doom and gloom, the Fed has bought you so much time that doom and gloom has raised up over the past year and a half, way up here. So let's say, let you say, does TA really matter, not matter, that kind of stuff? I'll tell you this. If JPM is telling you that would be the expected downside move, it's showing it right here. So he has a valid case for the worst that it could be, unless we have some kind of like Apple goes bankrupt and Google goes bankrupt and Nvidia goes bankrupt. Like Amazon goes bankrupt, they go into fucking zero or something like that, or like there's some kind of implosion, or there's fraud, which we do. We've got some fraud right now with commercial real estate. But even if you had the fraud from commercial real estate, what's the expected downside move at worst? 22.38. That's what your expectation would be. That's the worst. And as a matter of fact, let me turn this off here. And as a matter of fact, if you remember back when Mike Wilson and those guys were calling for 30, excuse me here, you guys could actually look up when Wilson was calling for this down here, right? Remember he was saying 3,000, 3,200, right? And then we're back in October, December up here, and look up what he was calling for up here, 3,500, right? So you can actually see when those guys are saying, this is the worst it can be. This is the worst that it can be. They're actually giving you, these guys are coming out from the banks and they're fucking quoting this shit right here. That's what they're quoting. So when they're like, hey, this is the doom, it was last year, year before, 10 years ago, 5 years ago, these fucking guys already know where their targets are. Even if they don't hit them, they know where they are. So it's not fascinating to me to hear these guys come out right now and say, yeah, 3,500. I'm like, yeah, that's the fucking guys thinks we're going to break down there and V-shape straight up. They already know. They fucking know before we go there. Isn't that crazy? Tell me that's not crazy. That they pretty much know if we roll and where these levels are, if we break through them, where the expected worst case scenario is. Okay, so maybe I'm misunderstanding again. So now I'm being told, don't think I understand my question, Cap. I'm wondering if now that these trillions of dollars that they printed are floating around in the system, if there's no way we could possibly go back to $3,500. There's no way. I don't know if there's no way. There's a lot of stuff we don't know. You have someone die in office. You have a war start. Those happen every 3 to 5 years, something tragic. And you see the market just blast down. So technically, I think we can go down there. I think there's a bunch of ways we can get down there, regardless of the money that's sloshing around in the system. But yeah, I get your point. I do get your point. But the TA is they're just buying time, in my view. I think the greatest trick I ever pulled on us was not the money sloshing around the system, but was the sideways action. The sideways action, I think, is more conducive to your point than the money sloshing around in the system. I think it has more to do with the sideways action in SPX and DJIA. Our market goes up. It's gone up since fucking the 1800s. So, and I don't think the money matters. I think that they're making this, they're pushing this market, or they've pushed this market sideways for so long that the more that they do it, the more time they buy for the damage that can be done. And I think Volcker, if you look back in the 50s and 60s of us slowly grinding sideways and up, was the same action. I don't think there's any difference to it. So like the TA out there, I get what you're saying, that we have to go up because of the money in the system and everything is cheap. I agree with that statement too. But the fact that we can't come back to test those levels, fuck no, we can do that all day long. We've done it all day long and historically. So I don't think it matters. Even if we fail to capture a new high throughout the end of this year one into Q1, I only think that matters if the macro stuff lines up. Like unemployment's still cranking right now. Unemployment's going to crank up into December. It should. Even if they try to retard it, it should. So we start hitting that 6%, they should start cutting rates. You'll start to see a flattening in the raising of rates and the lowering of the raising of rates. You should see inflation slam down in that 2.2%. And that should, like the unemployment, right, and inflation combined with, I guess the yield curve matters sometimes it doesn't. But the truth is unemployment was going to matter the most. Unemployment's going to matter the most, and no more rate increases, a flattening of the rates, and they'll start to chase with the rates on the downside. And you'll see inflation bounce off that 2.2% and start riding up. And when that happens, you should expect the Fed to start cutting rates. Historically, that's what happens. I think the idea here too, right, is they're trying to manufacture saving pensions, 401ks. They don't necessarily have to produce, but they're trying to save the destruction of middle America by trading it sideways. The longer they can trade this sideways, the less damage that is done. That doesn't mean you're going to like boom, right? Your 401k might be $100,000, and it might be $100,000 in 3 years. But it's not going to be $100,000 and you wake up and it's fucking $10,000 in 3 years. That's what they're attempting to do in the marketplace. So you might not experience any real growth. If you're like an old person or something like that, you see the money. You saw the money leave the system for that reason, right? You saw people buying real estate. You saw people putting their money into treasury bills. Like, like people are scared of that, right? Older people, not young people, older people are, because they're retarding the growth of wealth for these people. You see the money like entering and exiting the system the past year. So that's in sight of the sideways action in the stock market, not like the stock market not overperforming. These nest eggs that these old people have. I have something for you though. Who initiated that conversation? So I got something else cool for you, real quick. I want to show you guys something else that was fascinating that I wanted to point out to you. If you wanted a reason for the market not to look back right now, there's one other thing I want to show you here. And that is the something that I find fascinating. Forward PE ratios. If you wanted to make a case, you know your boy Gunlock there, right? And he came out. Remember your boy Gunlock came out? Look how high that one went. That one actually went way up here. Gunlock came out on CNBC back, I believe, in, I think it was February of this year. Yeah, it was right in here. You ready for this? Gunlock came out. Don't quote me on this, but I think in February, Gunlock came out on CNBC and he said, PE ratios are too high. And I was like, fucking Gunlock's been buying this shit down here since the late 1970s, late 1980s, right? It's for PE ratios, right? And look at this. These rich fucks been buying this since the late 1978 or so, right? This is what? 79. I said 78, but even here, this is 76 right here. They bought this one. They bought that one right there, right? And check this out. They've been buying this shit like nobody's business, right? Bought it down here again. Bought it down here again. Bought it down here again. These are the guys out there, right, that tell you, these are the assholes on CNBC that are billionaires, and they tell you, they talk out of their mouths to you. And they're like, bop, 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 bop. But in reality, what they're doing is they're fucking buying and you're chasing down the road. And you can see this last one right here. Look what they did right here. They bought the fuck out of this, didn't they? They were buying this. You ready for this? They were buying this in May of 2023. So that major low we had in May and June, remember they were doom selling you fucking shit doom? They lied to you. They bought May, they bought October, and they ran this fucker up. And look what else is happening right now. They're buying it again. They're buying it right now while they're doom scrolling you. They're buying it right now. Look, I'm going to snap a line right here. So as they're poisoning your brain out there, right? Look at that right there. That's October of 2023. And look what they did. Look what they did right here. They fucking bought it. They bought the whole fucking shabam right here. They bought that line. And they come in and they buy that line. Every time we bounce through this line down here, they're like, yeah, buy the fuck out of it. Yeah, buy the fuck out of it. Come back down again, start buying it again. Start buying it again. Start buying it again. That's the only thing that I would say to you on PE ratios that maybe is in relevance to money sloshing around the market. Cheap stocks are cheaper than they seem because of all the money sloshing around. I would give you that one if you wanted me to. You guys want to know the actual ticker? Hold on, ready? Here you go. I'll give it to you right now. Hold on a second here. I'll give it to you guys right now. You guys put it in your own. Put this into your own trading view at home. If any of you guys out there watching this show right now, right? If any of you guys are watching this show right now and you're looking for, I posted it right now. You pop that into your. You pop that motherfucker. Sorry, I shouldn't be swearing. You pop this fucking thing into your chart at home. You want to know when they buy, those big boys, those big fat bastards, those big fat white guys with dirty, greasy hands? Right here. I've been buying this shit since the fucking 70s. All these fat old white guys, they're lying to you as they buy down there. Isn't that crazy? They're lying to you. They've always been lying to you. They were lying to you in May and June of 2022. I shit you not. They were lying to you. They were lying to you in public while they were buying, hand over fist like pigs. That's what they were doing. You see that spike? See that spike? Isn't that crazy? Isn't that absolutely fucking crazy? Like, these fucking people are lying to you. You can see it right here. You can see it right here. I've been lying to you the entire time. If you're watching this program right now and you're one of those people that's like, you know, where do I buy or whatever, generational type stuff, you know, there was a generational buy right here. You guys want to see why I was telling you to buy, why I said this is it? They were buying this shit. You want to see where this was? Look at that right there. That's September 1st. Right? And look at this. You got a higher high right here. This is October. You guys remember October 11th, 12th? And they were on fucking FinTwit, screaming bloody murder crash. Guess what they did? They bought the fuck out of it. They were trying to get you out to buy, and then you have to chase. We're here right now while you're chasing, right? We were here in July. You were chasing. Meanwhile, you were not buying in October. You were not buying in May. So that in terms of money slosh around, cheapness of stocks, are stocks cheap? People telling you they're not cheap, they're fucking lying to you. That doesn't mean we don't go blast down to 3,500. We can blast down to 3,500. We'll still slingshot up and continue the upside over the course of 1 to 3 years, but that's where they're lying to you. Pretty wild, right? Pretty fucking wild. Okay. That's all I got for you guys. You guys want anything else from me? So that's what I got for you today. I expect us to be sideways ping pong all the way into Friday. I expect some outperformance still from small caps into Friday. You could possibly see, you know, I'm looking for more down into next week. I've got a pretty not like dangerously bearish, but I'm expecting some downside moves in the next week. You guys want to look at GME? Dude, I don't know if I want to talk about GME. I love GME, but let's take a look at GME. Look at that, dude. Woof. It's a fucking beautiful fucking thing right there. Look at that gorgeousness. I think it was down at like 60 cents, wasn't it? I think it was down to 60 cents. Okay, let's talk GME really quick. Oh, baby, look at that. Whew. Look at that. This is a chart that we did before. You guys can't see it, can you? My bad. Here's GME. We charted this out for you before. So there's GME. Want to see it? Let's take a look at it right now on a lower time frame. Let's see what I think about GME. 30 minute, 30 minute. I'm bearish on GME. But not forever. I think it's more like I think it's more like this. I'd like to see more, just a little bit more dippage, and then I'm bullish right here, $23. Just like that for tomorrow on that's GME for you. I'd like to see that on GME. I guess I'm like short-term bearish and then pretty fucking bullish to the upside. Here, we'll do this one here. Won't get too crazy. Something like that right there. And then we'll draw something like this. Oh, yeah, that's good right there. Let me check a previous high here. Give me one quick second here. Right there. You want to snap that for yourself and take it home? Maybe $13, and then you got to move to the upside up here. Ultimate price target be $24, $20, $21.69. How about that? $21.69. I like it. 69. All right, yeah, you guys have a great day. I'll see you guys tomorrow. Yeah, that's what I think. They beat it into earnings and then they bring it back up. I'm with Legend on this one. Check out QS. See you guys. I'll have a great day. I'll do CS for you really quick. QS, what do you want to do? QS or CS? I'll call you, Sam. Who asked? Somebody asked for something. QS or CS? Hold on, I'll look at QS really quick. Ooh, like it. Nice turn. I like it a lot. Bullish. You ready for it? Bloodbath. Bloodbath. Hold on. And then right there. This is QS. I want to see that get bought right there. Buying for $6 and price target $8.19. QS. Was that good? Got it. I did it, Connor. Done. All right. I'll see you guys soon. I'll see you guys tomorrow morning, baby.